Today, I want to talk about how the shorts are getting desperate because the squeeze is almost here. I also want to talk about how Janet Yellen is saying that fraud is a massive problem in the banking industry, which is something we've been saying for years. So stay tuned and let's make some money. So now let's dive straight in with the key information. So we can see here Bloomberg have published an article saying that US Treasury Secretary Janet Yellen has said that fraud in the banking system is becoming a huge problem. But as Danielle points out, if Janet Yellen is suddenly realizing something in the financial system that's a risk, it's likely already a crisis. The Fed always tries to avoid publicizing things in the mainstream media or in public to avoid panicking regular everyday Americans. And therefore, on many occasions, by the time we read about it in the mainstream media, it's already way past an issue, way past a huge problem, and it's likely already a crisis. And the Fed is now even using AI to try and detect and deal with the issue of widespread fraud in the financial system. Janet Yellen added, saying that fraud is now seen nationwide, including through a big increase in fraud around government checks. And speaking of fraud in the banking system and the financial system, you may have seen SMCI, Super Microcomputers, a giant $20 billion company, dropping 30% in one single day. Now, the reason why SMCI dropped 30% in a single day is because their auditor, the public accounting firm Ernst & Young, decided to quit and resigned from their post as auditor. Some of you OG viewers may remember that I was actually an auditor myself over in the UK for one of the mid-market firms slightly smaller than Ernst & Young. And in my 8-year history of working as an auditor, our firm never once resigned from an audit client. Not even from the sketchy ones, not even from the really sketchy firms. It was always a last resort to resign from an audit. As I say, I never saw it once in 8 full years. You've likely seen on the news in the past some of these major firms like KPMG, PwC, Deloitte or Ernst & Young being fined massive amounts when one of their audit clients ends up going bankrupt. So even for blatantly bankrupt companies, the auditors still don't ever resign. They only resign if there's massive widespread fraud. As Amit added, he said, how bad are the books that your accounting firm literally decides to quit? Ernst & Young even said the reason why they've resigned is because they have doubts on the integrity of the financial statements. So this is potentially another Enron-sized scandal, a $20 billion company that was previously a $50, $60, $70 billion company committing widespread fraud. So as we can see, fraud in the banking system and in the financial sector really is as widespread as Janet Yellen is saying. But as I said, this is something we've known for years. So let's also talk about how the shorts are becoming more and more desperate to try and kick the can in any way possible. So I've touched previously on the Granite Shares one-time short AMC daily ETFs. These are ETFs created to take a short position in specific one-off stocks like AMC, like GameStop, through an ETF. Now these have become really popular as of late because these ETFs allow shorters to bet against AMC without locating or borrowing shares. On top of that, you'll know with the XRT ETF that short interest is not capped at 100% of the float. Right now, XRT has over 600% of the float all shorted all at once. So this is just another way the shorts have been trying to short the float of AMC and GameStop and other companies of that nature multiple times over. But all they're doing is digging themselves a deeper and deeper and deeper hole, multiplying their leverage ratio on this short position. So of course, as soon as these shorts end up underwater, they end up underwater massively to the tune of tens, if not hundreds of billions of dollars. Teddy Bunny has also pointed out this photo recently tweeted by Ryan Cohen also suggests where we are in the Roaring Kitty emoji timeline. He suggested we've now fully passed the eyes emoji, the dog emoji and the America emoji, and therefore the only emojis left are the fire, explosion and the cheers emoji. This is just another reason why the shorts are becoming more and more desperate because the countdown for them really is on. especially because, as you may have seen, AMC is currently trying to break outwards of this rising wedge, and GameStop has already broken outwards of its wedge. Since May time, both GameStop and AMC have been trading inside this bullish rising wedge, and GameStop has just broken upwards out of it. Especially for GameStop, that $25 level is the real trigger, and as soon as we're over $25 and past $30, the squeeze really starts. Similar for AMC, as soon as AMC runs past that $5 region, $6 comes quick, and then $10 and above. Also guys, I wanted to quickly touch on Mumu, who are currently holding a massive sign-up offer. Not only can you get the usual 15 free shares, but you can also get a flat $30 cash reward on top of 8.1% interest on uninvested cash. This is the biggest sign-up bonus Mumu have ever done, and is the best time to join Mumu with a straight-up $30 cash reward on top of the usual 15 free stocks. Mumu has also just released cash accounts, and in those cash accounts, margin is not enabled, meaning that share lending is also not enabled on those AMC, GameStop and other shares as well. And with the upcoming elections, there's going to be a lot of volatility, and therefore you need the best broker that's not going to experience data outages and isn't going to turn off the buy button during those volatile periods like Mumu. So guys, be sure to join Mumu using my link in the description below. And something that also ties in at the same time is that 5 US banks currently face billions in losses as silver's price spike hit short sellers very hard. You may already know that many of these major banks have been shorting the precious metals market, specifically the silver market, for a long time. Many of these banks have also been fined massively for illegally shorting the precious metals market as well. And you may remember from last year, a few banks suffered massive margin calls and they even turned off trading for a day or two. I think it was when lithium rocketed in price. And the article says that silver prices have experienced a significant increase, rising over 6% to exceed $33.6 per ounce. This unexpected surge has put 5 US banks at risk of substantial financial losses due to their large short positions in the metal. And these short positions are already estimated to be underwater by at least $1.3 billion. And these 5 banks that are accused of manipulating the price of silver and holding a massive short position are UBS, who could have guessed it, Deutsche Bank, HSBC, Bank of Nova Scotia and JP Morgan Chase. The article says many analysts believe that bullion banks like JP Morgan, UBS and many others are engaging in aggressive naked short selling, and there's a strong chance that these banks will end up on the wrong side of the trade as this rally continues, triggering a powerful silver short squeeze. And of course, if these banks ended up getting caught in a silver short squeeze and end up being margin called, it's likely those margin calls would flood into other areas of the market, like the meme stock market as well. You know, I've said before that to me, it doesn't really matter which way round the squeeze happens. To me, it doesn't matter if GameStop squeezes, causing margin calls, causing the AMC squeeze, or the other way around, or if silver squeezes first, causing margin calls, causing both the AMC and GameStop squeezes as well. Finally today, I wanted to talk about this article which explains how actually all short sellers are out against each other, and how barely any of the short sellers actually get along. These short sellers don't trust each other, they don't like each other, they don't acknowledge each other's work, and they're always actually fighting against each other a lot of the time, not with each other. The article goes on to explain how John Hempton doesn't like Andrew Left, how Roddy Boyd doesn't like Fraser Perring, how Edwin Dorsey doesn't like Nate Anderson from Hindenburg Research, and how none of them actually get along, because many of these short sellers aren't nice people and don't like each other. So it seems that something we've suspected for quite a while, which is that short selling is very much a dog-eat-dog world, and when the squeeze happens, these short sellers will rush to the exit, is actually very true. None of these short sellers get along and will certainly be out to save their own skin, effectively making the short squeeze more volatile. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video.